What's up, crypto fam, and welcome back to Bitcoin Bulletin. Get ready for a ride because the market is absolutely electric today. We're kicking things off with a bombshell. Bitcoin whales, those massive holders, have been unloading, and we're talking billions. This isn't just a ripple, it's a tidal wave that's reshaping price analysis and sending shockwaves through the trading community. We're diving deep into what this epic sell-off means for your portfolio. Next up, we're turning our attention to the big players in the ETF space. BlackRock's IBIT, a name synonymous with institutional crypto, has been flashing some serious warning signs for 2 straight months. That's right, key metrics are screaming caution, and traders are favoring puts over calls. Is this a sign of things to come for the entire spot Bitcoin ETF market? We've got the inside scoop. But the whale action doesn't stop there. We're seeing Bitcoin stall around $112K, and guess who's leading the charge? You guessed it, those same whales. Glassnode data reveals selling pressure is everywhere, from the smallest wallets to the biggest behemoths. Plus, long-term holders are finally cashing in. What does this widespread distribution mean for Bitcoin's next move? Stick around to find out. And finally, while Bitcoin and Ethereum eye massive gains, could a new AI-powered crypto project be the real star of the show? Ozak AI's presale has already blasted past $3.3 million, with analysts predicting even bigger upside than the top cryptos. We're breaking down why this early-stage opportunity might be the one you've been waiting for. All that and more, right here on Bitcoin Bulletin. Don't forget to smash that like button, subscribe for more, and hit the notification bell so you never miss an update. Bitcoin whales unleash a $16.5 billion sell-off. What happens when the giants of Bitcoin decide to make a move? In recent weeks, their actions have stirred the crypto waters, prompting a wave of reconsideration among eager investors. Rather than mere transactions, the trades executed by these whales echo through market sentiment, reshaping BTC price analysis and igniting emotional responses across the trading community. In a dramatic turn, Bitcoin whales have unloaded a staggering 147,000 BTC, translating to a colossal $16.5 billion over the last month. This sell-off comes in the wake of Bitcoin reaching previously unimagined heights, prompting numerous long-term holders to seize the moment and cash out, consequently triggering a significant correction in BTC prices. The immediate aftermath was palpable. Bitcoin's value slipped significantly, obliterating over $1.7 billion in leveraged positions and leaving traders in a state of disarray. The once clear relationship between BTC whale activities and broader market volatility has sharpened, revealing a stark truth. While whales generate significant selling pressure, a counterforce is rising, with Bitcoin treasury companies steadily hoarding assets, creating a dramatic push and pull within Bitcoin market trends. This unpredictable atmosphere is further complicated by technical analysis, revealing a concerning bear flag pattern. With Bitcoin now trading below key moving averages, the outlook appears bleak, with strategists intently observing critical support areas. Should Bitcoin descend beyond these levels, a rush towards the $100,000 mark seems imminent, feeding the unease stewing in the hearts of traders. Yet, amidst the gloomy backdrop, a glimmer of hope shines through the increased activity of Bitcoin treasury firms. These corporations are ramping up their acquisitions at a pace eclipsing traditional ETFs, with companies like Japan's Metaplanet and Michael Saylor's strategy underscoring a burgeoning trend in corporate engagement. This surprising accumulation hints that a foundational market floor may be forming, countering the bearish trends driven by the whales. Furthermore, new mid-sized investors are entering the scene, absorbing the whale sell-offs. About 5.5% of Bitcoin's total supply is securely anchored in a strong support range, reflecting increased demand from fresh investors. This dynamic could herald a pivotal moment, potentially serving as the last chance for bargain buying before a broader market recovery. Analysts indicate that a dip below key levels could unleash downward pressure, while a rally past others might signal the end of the bearish trend. The market's tension is thick. Each transaction has the potential to pivot sentiments, making the environment increasingly unpredictable. Will fortune favor the bold, or will the current sweep them away? Don't go anywhere, because the institutional sentiment is shifting, and we've got the data to prove it. Next, we're breaking down the bearish signals flashing from BlackRock's massive Bitcoin ETF. BlackRock's Bitcoin ETF flashes bearish signals for 2 months straight. A key metric tied to BlackRock's Nasdaq-listed spot Bitcoin ETF, IBIT, has been flashing warning signs for 2 straight months, signaling a sustained cautious or risk-averse outlook from traders. This isn't the first time we've seen this pattern, and it follows a period marked by sharp declines in both the spot price and IBIT. IBIT's one-year put-call skew, a measure of market sentiment or pessimism, flipped positive on July 25 and has remained comfortably above zero since then. In other words, traders have consistently favored protective puts over bullish calls for 2 months. A similar put option bias was observed earlier this year, a period marked by sharp declines in both the spot price and IBIT, primarily driven by broader market weakness. This sustained bearish sentiment suggests that investors are increasingly concerned about potential downside risks. Furthermore, IBIT's price trend has stalled since July, failing multiple times to rise above a key level. Recently, it formed a lower high, meaning the recent peak price was lower than the previous high. This pattern signals weakening buying pressure and suggests that sellers are gaining strength. The formation of lower highs often indicates a potential downtrend or bearish momentum, raising questions about the ETF's short-term performance. The market is watching closely to see if this bearish sentiment persists and how it might impact Bitcoin's price. While some analysts point to potential buy-the-dip opportunities, the consistent bearish bias in IBIT suggests that caution remains the prevailing mood among many traders. But the selling pressure isn't just confined to ETFs. It's happening across the board, even from the biggest players. Next, we're diving into the widespread distribution across all Bitcoin wallet groups, including the whales themselves. Bitcoin stalls as whales lead a massive selling wave. Bitcoin remains stagnant in a tight range, while other assets like gold and U.S. equities are hitting all-time highs. This divergence raises questions about Bitcoin's current market momentum and the forces at play. According to Glassnode's accumulation trend score, selling pressure is evident across all wallet groups, from small holders to the largest whales. This metric, which measures accumulation strength based on entity size and recent coin acquisition, shows a clear trend towards distribution. Notably, the largest whales, those holding over 10,000 BTC, are showing some of the most aggressive selling over the past year, indicating a significant shift in their strategy. Compounding this selling pressure is the behavior of long-term holders. The percentage of circulating supply that hasn't moved for at least 1 year has dropped sharply, and the same trend is observed for holders with assets for 2 and 3 years or more. These investors, many of whom bought during previous market peaks or accumulated during bear markets, are now realizing their profits. This profit-taking adds considerable weight to the ongoing sell-off, making it difficult for Bitcoin to break through its current price ceiling. However, there's a crucial distinction. Investors holding Bitcoin for 5 years or longer remain steady. This suggests that the most seasoned, long-term investors are not participating in the sell-off, potentially indicating confidence in Bitcoin's long-term prospects despite short-term headwinds. This widespread distribution, driven by both short-term traders and profit-taking long-term holders, creates a challenging environment for Bitcoin's price to advance. The question remains whether this selling pressure will subside or continue to suppress the market. While the giants are selling, could a new player in the AI crypto space be gearing up for an explosive rally? Next, we're exploring Ozak AI's presale and why it might offer bigger upside than Bitcoin or Ethereum. Ozak AI presale blasts past $3.03 m, signals bigger upside. Bitcoin and Ethereum are showing signs of renewed energy, with analysts forecasting significant price surges. However, attention is increasingly shifting to promising presale projects like Ozak AI, which has already raised over $3.3 million, with many buyers seeing more compelling upside potential here than in the established giants. Bitcoin is trading around $112,755, with forecasts suggesting a potential climb to $150,000, supported by institutional demand and ETF inflows. Despite this bullish outlook, Bitcoin faces immediate resistance around $120,000 and stronger limitations near $135,000. While its uptrend is strong, the course may be slower, offering steadier profits rather than the explosive upside seen in smaller-cap projects. Ethereum, at $4,196, also shows robust action, with potential to reach $5,000, driven by demand for decentralized applications. However, like Bitcoin, its path to new highs involves overcoming significant resistance levels, and returns from current levels might be more modest. In contrast, Ozak AI is in a much earlier growth phase. Its ongoing presale, currently in stage 6 at 0.012 per token, offers investors a chance to acquire a substantial number of tokens for a relatively small entry, creating an opportunity for exponential upside if the project achieves widespread adoption. Analysts highlight Ozak AI's blend of artificial intelligence and blockchain as a key advantage, positioning it in two of the fastest-growing tech narratives. Should Ozak AI reach its projected targets of $0, $50, 1, 20 in the coming years, early investors could see returns many multiples higher than what Bitcoin or Ethereum might deliver from their current elevated levels. A significant factor fueling Ozak AI's credibility is its partnership with Perceptron Network, which operates over 700,000 active nodes. This collaboration allows Ozak AI to integrate prediction markets and trust-based rewards into its ecosystem, ensuring its AI-driven insights and decentralized programs are both innovative and scalable. Unlike purely speculative meme coins, Ozak AI is already securing infrastructure partnerships that offer real-world adoption potential and strengthen investor confidence. The project's trajectory, marked by over $3.3 million raised, signals growing community belief that Oz could become a breakout star of the AI crypto movement. That's all the news for today, but we've got a super quick recap coming right up. Don't forget to like, subscribe, and hit that notification bell. And that's a wrap on another explosive Bitcoin bulletin. We saw Bitcoin whales unleash a massive $16.5 billion sell-off, BlackRock's IBIT ETF flashing bearish signals for 2 straight months, widespread selling pressure across all Bitcoin wallet groups, and the exciting rise of Ozak AI's presale promising huge upside. If you got value from this video, please smash that like button, subscribe to Bitcoin Bulletin for daily crypto insights, and ring that notification bell so you never miss a beat. Follow us on all social media platforms for more real-time updates. We'll see you in the next one.